Have you ever wondered what it would look like if the entire financial system tried to warn us before it broke? Because right now, it's not whispering, it's screaming. There's a signal flashing in the bond market that has predicted every major U.S. recession of the past century: the Great Depression, the dot-com crash, the 2008 meltdown, and it's flashing again today. It's called the yield curve inversion. And this time, it's not just another warning light. It's a full-blown red alarm that could reshape the American economy as we know it. Before we break this down, and if you care about protecting your money, your job, and your future, hit that like button so YouTube knows this is the kind of truth you want more of. To understand what's happening, we have to go back in time to the late 1920s. The world was drunk on optimism, stocks were soaring, credit was easy, and everyone believed they'd discovered a new era of prosperity. But quietly in 1928, the yield curve inverted. That meant short-term interest rates, like 3-month loans, suddenly became higher than long-term ones, like 10-year bonds. That's completely backward. Imagine a bank charging you more to borrow money for 1 month than for 10 years. When that happens, it means money is tightening and smart money is running for safety. People ignored it. Stocks kept climbing, right up until 1929, when the illusion shattered. The Dow collapsed 80%, unemployment hit 25%, and that small line on a chart became a symbol of ignored warnings. Fast forward. In 2000, during the dot-com bubble, the same signal appeared. Tech stocks exploded and then imploded. In 2006, before the housing crash, the curve inverted again. People said, this time it's different. 18 months later, Lehman Brothers was gone. Millions lost homes, and the global financial system nearly collapsed. Now here's the part nobody wants to admit. The same inversion began in 2022, and it's deeper and longer than any inversion since 1980. That means investors trust the next 10 years more than the next 6 months. That's not confidence. That's fear. Right now, everything looks fine. Unemployment is low. Stocks are climbing. The Fed says inflation is cooling. But this is the same calm we see before every storm. Think about it. In 1928, markets rose for 2 years after the warning. In 2006, stocks hit record highs after the curve inverted. The delay always convinces people it's a false alarm. And when the crash finally hits, it's brutal. Now, back to the signal Wall Street can't ignore. The yield curve is basically a map of fear. When investors demand higher interest for short-term loans, they're not worried about the distant future. They're terrified of what's right in front of them. They'd rather lock up money for a decade than risk lending it for 6 months. And here's the rule history has proven again and again. The deeper the inversion, the deeper the recession. Shallow inversions equals mild slowdowns. Deep inversions equals financial devastation. And today's inversion? It's among the deepest in modern history. In 1929, debt levels were tiny compared to today. In 2008, the problem was mostly housing. But now, it's everywhere. Government debt, corporate debt, student loans, auto loans, credit cards, all at record highs. And for the first time, the cost of debt is rising while the volume of debt is exploding. That's like raising the rent while everyone's already broke. Something has to give. And when it does, it'll break fast. Why do people ignore it? Because in every era, we convince ourselves it's different this time. In 1929, people thought technology made crashes impossible. In 2006, they said housing prices never fall. In 2024, people believe AI will save everything. Every generation finds a story to stay comfortable. But the yield curve doesn't care about comfort. It measures reality. The last 3 major inversions all predicted a crash roughly 16 to 18 months later. If that pattern repeats, the window for danger is right now. Corporate bankruptcies are quietly rising. Delinquencies are climbing. Small businesses are struggling to refinance debt at double the interest rates. And while headlines celebrate strong job numbers, the truth is more Americans are working multiple part-time jobs just to survive. This is what a system under stress looks like. Calm on the surface, chaos underneath. All it takes is one spark, one major default, One liquidity freeze, one global shock, a war, a credit crunch, a cyber attack. Because today, every economy is connected by the same fragile web of debt. When one strand snaps, the whole web shakes. And what's coming might not be just another recession. It could be a monetary reset, a moment when the world redefines what money itself means. But here's the truth they never tell you. A crash doesn't have to destroy you if you understand what's happening before it hits. Because every collapse in history has also been a transfer of opportunity. The Great Depression built new industries. 2008 created the digital economy and crypto boom. What's coming next will destroy the fragile, but reward the prepared. So, what can normal Americans do? Get liquid. Cash isn't trash when credit freezes. Having 3 to 6 months of expenses in liquid form is survival, not paranoia. Own real assets. Central banks are buying gold for a reason. Even a small portion of savings in hard assets can shield against currency devaluation. Reduce high-interest debt. The next crisis will punish those carrying credit card or variable rate loans. Pay them down now. Diversify income. Build a side skill, an online business, or digital income stream. Because jobs tied to debt cycles are the first to vanish. Stay informed, not scared. Fear freezes action. Knowledge creates control. The yield curve isn't a myth. It's the voice of the economy, and it's speaking louder than ever. It's telling us pressure is building. It's telling us denial won't save us. And it's telling us that those who see through the illusion will be the ones standing when the dust settles. Every calm before a storm feels peaceful, until the first thunder cracks. This time, you can see the lightning forming. The question is, will you prepare or pretend? If this video opened your eyes, hit subscribe and share it with one person who needs to understand what's coming. And remember, preparation isn't fear, it's freedom. See you in the next video.